Good morning, guys, and welcome to today's edition of the London Session Open. Today is August 7th, 2019, and I hope you guys enjoying the summer. We're having a bit of activity in the market, which is always nice. We had a big slide in the New Zealand dollar. Reason for that is that the New Zealand Central Bank cut interest rates by 25 basis points. We're going to talk about that, see if there's any interesting opportunities there, and of course, we're going to provide you guys with a general market overview. In the chat box today, most welcome to just say hello, or if you have any questions, you're most welcome to do that. If you're totally new to this market update, it's a daily update I do here on investingq.com and on the ATFX YouTube channel. The many ways of staying on top of what we're doing. One is to just subscribe to us on YouTube, but we have something new, and it's called, well, it's not called, it is a Telegram channel, which we actually just set up. So it's very straightforward. If you are on Telegram, you just subscribe to us. And every time we post an article, me or one from my team, you will get a notification. I just created this yesterday, and you can see we already posted a few times. Obviously, it's quite a lot of content, so if you do feel that you're getting overwhelmed, it's very easy to just mute the channel. You still get the notifications. I mean, you still get the messages, but you don't get that pop-up all the time, which I know sometimes can be a bit too much. But yeah, keep an eye on that. It's very easy. Just need to get yourself a Telegram. Telegram is like WhatsApp. Very popular across the world. Okay, let's kick off and let's talk about the Kiwi dollar. Kiwi dollar, that will be the New Zealand dollar. So what's happening here is that the Central Bank of New Zealand decided to cut interest rates, and they surprised the market, and that created a major reaction in its price. So to begin with, the trend was always lower, and as you know, the Aussie dollar has been trading lower, GBP has been trading lower, so the dollar in general has been rather good. Now, this here on daily, as you can see, the market was within a big, not a big, but it was within a triangle type. And yesterday, let's see if I can hide some stuff. Yesterday, you can see that the market was trying to find some sort of a base and moving upwards. But on the news of that surprise rate cut of 50 basis points, you saw this big candle. And the way this looks like right now, we're probably gonna be, if we close below 64.18, we'll have a breakout of that triangle. And not only that, we'll take out these lows and we'll take out this low down here. So if we take out this low here, which we probably will do, or we already been below it, that would be the October, or the 18th low. And then the next natural level is down here at the September 15th low. September, like the low from 2015. Now, if we focus as well on the triangle, then that gives us a different target, which is about 60, and you get that by taking this section here. Some people are gonna assist to take the base, which I'm pretty much doing here. You could go backwards, I guess, but looking at it like that, the breakup point is here, so your target is down here. It sort of depends exactly how you measure. It doesn't really matter. 20 pip here, 30 pip there. Clearly, we looking for another, say, maybe 200 pip if we reach the 62 level, and 400 and what is this? Yeah, 420 pip, more or less 400 pip if we reach the 60-30 level. So it's looking rather interesting. Far more fun than your euro dollar, which is just being rubbish for 1.5 years. Unless, of course, you like those conditions. I'm terrible trading in those conditions, so I just ignore it. The euro dollar, that is. So looking at this today, we just need to be realistic about this, right? If the market would strongly move upwards and go above 65, 68, then that will be a warning sign. And you see, most of the time, people would like to short on these sort of news. It's sort of textbook example, short when they cut interest rates. So if we would swing all the way back up here, sort of, it would be like a major surprise. and probably will have a major short squeeze. So the whole thing is kind of going to go upwards. So the line in the sand here right now will be 65.68. So if you imagine everybody have their stop loss orders here somewhere, then you can just take a fib either from here. You can also just take it from the spike, but let's take it from the spike today so we don't confuse too many people. So that's your first fib at 64.58. Then you have the low here at the 50 level at 64.81, and these are just natural support levels which probably turn into resistance. So if you're going to do anything today, keep a very close eye on this market. Maybe it will be enough here, but probably from these levels I will start anticipating this to trade lower. And from a fib perspective and sort of the rationale, well, like what we went down, is it even realistic that we're going to be trading up here? No. So we can probably push this down a tiny bit more, ignore that spike, and then maybe from 64.50, these levels here, again, probably trading lower, and that's what I would focus on today in the world of Forex. As for GBP versus the USD, it's just lingering around the lows. There's no sign we're going to get any sort of deal anytime soon. Remember, when we were trading up here, I said we can probably go down to the 2016 lows, and that's where we are right now. So obviously the market needs a bit of a break sometimes, and that's exactly what's happening. And you can just guess, what if we go upwards? Well, unless there's a big shift in negotiations between UK and the EU, there's not going to be anything. So probably if we go up, people probably going to sell. And what's sort of the next natural step here? Well, you take it one low and you go to the next low. Now the next low is, yes, I need to go back. I think it's 1985. Yes, 1985 at 105, which again, I don't want to bore you, but it wouldn't be unsurprising if we would reach those levels. There's several reasons for it. There is just a common sense, and then you have the break here. Take this level out, then, sorry, I'm not thinking straight now. Common sense just dictates that it would be hurtful, both from the EU and the UK. But then you have this massive head and shoulders. So if we go down to these levels here, would not be unsurprising at all. And then we'll see what happens. So what's the game plan? I would just take it really easy, only on the break to 127.5, and get your scalping hat on. Maybe scalp the move to the downside to the pattern target, and the alternative is swings back up, and then up here people might look to sell. Euro versus USD is just trading sideways. I was bearish on the break. It would have made perfect sense to short sell on that, but the euro is acting like a currency, funding currency. So we talked about this before. Let me actually show you. This is the German 10-year. I think this is the German government bond yield. The thing is at negative 56. Negative 56. So if the German government right now goes and borrows money for 10 years, it will not pay. It will pay back less. If I was the German government now, anything they wanted to do, highway speed trains, new highways, whatever worthwhile investment that is, build a space program, I'm not sure. Anything that will be a worthwhile investment that's going to increase productivity in the long run, talking about 50, 60 years, this is sort of the time to do that, because you borrow for nothing. And of course, making sure that goes to good investments. And what this is also maybe projecting is that we're gonna have negative or like a recession or very low inflation, because the German 10-year government bond yield is supposed to be sort of the average yield over the next 10 years. And the point is here, when you're not paying, obviously the government doesn't pay. There's corporate bonds, which is there's a spread between this and higher levels up. So what happens is that you have corporations, you know, they say, okay, I want to buy machinery, and So what's gonna the cost be? Maybe it's gonna be, I'm just guessing now, maybe 2%. So and say that cost is just for the sake of it. Say you borrow €1,000,000. I'm very bad at this right now. I'm not even sure why I need a calculator. So you pay 20,000 euros to borrow 1,000,000 euros, and then you invest this in this machine, and this machine is maybe going to cost you to increase your worldwide sales, so cut your costs with 20% or something, and maybe that amounts to significant amount of money. So for the sake of it, say you make 100,000, so then you have 100,000 income, which then you take the 20k to pay back, and you make 80, right? So what happens is that a lot of corporations, they borrow money in the euro area, and then they put that into high productive investments, maybe like in the US and in other parts of the world where the economy is growing much faster. So the consequence is that when things go a bit crazy, people want to hedge that risk, and that lifts the euro dollar upwards. And I think that's what's happening. Same way as it's been in Japan for many years. In fact, in Japan, the Central Bank of Japan has pledged to, if I remember correctly, pledged to keep the Japanese government bond, 10-year government bond yield at 0%. So they pledged to keep it there. So again, free money if you can get access to that. So that is why, again, the Japanese yen strengthens in bad times, and that's again why the euro also gains in bad times. And then there's other things that are even more obvious. The fact that they have very low inflation in the euro area. So inflation is at around 1% or so. So the euro is just losing 1% in value per year. But then you have other places in the US where inflation generally is much higher. So on a relative inflation perspective, it also explains why the dollar in the long run, for example, against the Japanese yen, has been softening. If you look at how the dollar has traded versus the Japanese yen since 1975, well, at that point, $1 would give you 292 yen. Now you're down at about 100. And again, it has to do with the fact that you have less inflation in Japan. It's very easy to look at relative inflation. So you look at inflation in one country versus the other one, and it will show you that it sort of follows the same trend here. And that's sort of very long-term, old-school sort of way of analyzing the market. Is called PPP. Okay, dollar yen then. Well, we added. So what's going on here? So stock markets, as you know, are trading upwards. So dollar yen is having a bit of support. The Chinese government as well said they're not gonna necessarily allow their currency to drop very fast, and that's sort of pushed price upwards in the dollar yen. And if you take fib from the very high to the low, I think we can probably trade lower. I said that probably up here could be a good little spot short sell, and then I said let's go back on that idea and focus on a more corrective move, because you're having a rather decent gains in something like the today European stock markets and as well in US stock markets, and that can lift things upwards. But don't be fooled. I think in the longer run this can continue to trade lower the way it looks like right now, and it's always about that risk reward ratio. So I wouldn't mind trying out being bearish from these levels up here. So we started to talk a little bit about stock markets. So let's talk about the German DAX. Okay, so this is the German DAX, and this is your daily chart. So obviously we were having a bit of a, actually let's take it in a different order. This is the S&P 500. So we have that free fall move in the market, right? To some extent, market down with about 8%. The market is sometimes stupid. I mean, it is. and but it's not always stupid. So what I'm trying to say with that is that obviously we went upwards because the cutting interest rates and then the economy overall indicators from the US doing relatively good. So that's why we always sort of drifted upwards, right? And then so the market goes from being very bullish, new all-time high, to a bit of a correction. Does that make sense? So we go from being rather optimistic to suddenly very, very pessimistic. And that doesn't square up. You don't usually go from a very good state into a very, very bad state. It takes a period of time. And you could argue, because the S&P hasn't really done so much since 2018, so you can argue that, there has been negative progress throughout this period, which I don't disagree with. But I'm trying to tell you here is that I think people coming to their senses a little bit, in a way that any new tariffs are going to kick in September. And it's going to be things that are bought after September 1st. So anything that is going to be on a boat before, anything that has, they have a month to buy stuff. And then after that, so even if you buy it on August 31st, if the September cutoff period, if you buy before that, it doesn't matter if you're going to ship that 3 months later, or if it's going to take 3 months for that to arrive in a boat from China, right? Not that it takes 3 months, but you get the picture, right? So realistically, bad data is going to show up in maybe October, November, December. So December's a long, long time from now. Even October's a long time from now. So what if you just get 2-3 good indicators that are good? Well, we could easily be back up here. So what I'm thinking here is that we can probably have a bit of more of a move to the upside. On the back of that people start to say, okay, we were actually quite good just a few days ago, and now everybody's panicking. And I think people obviously bought here, and it's quite clear here. Now this has moved ahead. So unless you grabbed it down here, it's going to be very difficult to do anything. And the only thing you can do here is maybe to look to grab it again if we revisit the lows. And again, it's always about the risk-reward ratio. So if this does not hold, we could probably trade to the next level, which is down here at 26.11. Now what's happening, I think, here in Germany and in Europe in general, just slow the CAC 40 or the German DAX here, you can see that they have not catched up with the US, and they're trying to catch up a bit right now. So in the German DAX, it did that nice thing it does sometimes, which is it trades below support, just to not really trade much lower. Yesterday, this is all the way down, all the way up. If we didn't have this little high here, it would have been an amazing candle. And if you look at this from a short period of time, it's now trying to stabilize. So I'm guessing, and also I saw people on Twitter today trying to short sell here. And I think he had something with dog in his Twitter handle, was retweeted by somebody else. And that's sort of, not that it matters if, well, actually it does matter if someone puts dog in the Twitter handle, but you sort of get the idea, maybe the age group that is shorting at these levels. Doesn't mean that it might not work out, but I think we're seeing a bit of indication that maybe this panic is, at least in the short term, slightly over, and we can easily go down. But again, it's all about risk-reward ratio and the likelihood of actually, you need to be in it for the long run. You don't have to be in it for the long run, but you have to have good strategies that work. And scalping on a line break, because the guy did something like this, and scalping on this little move here, I wouldn't really be doing that, because anything can happen. So what I'm thinking here is that we could potentially trade above 11,752, and you can get a bit more of a short squeeze. I think we're in the process now, heading potentially upwards, and so I think we can probably go a little bit upwards, and then we'll see what can happen. Now we need to be clever about this. So you want to short stock markets. Well, we talked about being bearish. When I got stopped out here, that's when we wanted to be bearish, right? So that is when it made sense. It's the same thing with the S&P 500. When the break was up there, that is when it made to go short. Made sense, not down here. And now we need to be clever about it. So is there other stuff we can trade that are better? Well, maybe how about dollar yen potentially? You know, it's the same sort of trade. So I think here we can probably take out this high, go a little bit higher. I would definitely not be selling down at these levels. We need to get a better risk reward ratio. And if you're really, really bearish, again, maybe dollar yen could be something. Alternatively, maybe something like the S&P 500 could be a good idea. But at higher levels, the good thing with the S&P is which is trading sideways, so it's rather straightforward. You know, take out the low, you get stopped out on your bullish position, and at the same time you turn bearish. And obviously in hindsight it was a very, very good risk reward ratio position if you were quick enough. Donald Trump spoke here, he took out that high, or you could have put a stop above that level, and at the end the market would have given you a 3 times risk reward ratio, which is very, very good, and also in a very short period of time. All right, gold prices on fire, guys. So we talked about this heading happening, and it did. So the idea here, we had a big wedge, as you might remember. So we had the break here. I said the break here is probably gonna trigger that move. Now the question is this though: why did I not trade it? The reason why I did not trade it here is because it would have been fair to assume that if you were on long there, that you needed to put a stop loss here, because you can see there was no other low here. The last low was here. So the reason why I didn't trade that is because the risk reward ratio was 1.1, and then I was waiting for the pullback. It doesn't mean though that you couldn't have traded this. Like I was short copper and Aussie dollar CAD, and in Aussie dollar CAD I grabbed about a 2.5, 3 times risk reward ratio, which is technically a better setup than this, because you gonna go with something that makes sense like this, but you also want to have your risk reward ratios in place, and we had that in the Aussie dollar CAD. And what's interesting here is, of course, this is a high. Now this is the profit target, but that's the first profit target. Remember, we have a flag pattern target at 1545, which I think we could potentially reach. So the question is here, how should we trade that? Well, I think if we have maybe a 50% correction, that could be interesting. Maybe 61.8. I'm not sure exactly what's going to trigger that, but if that would happen, then that would be really interesting. And I'm going to remain bullish as long as I trade about 1429, which is down here. And again, it's all about the risk reward ratios, and this is just one way of trading trade wars and risk off. There's other ways. Again, dollar yen could be something. The Aussie pairs, the New Zealand dollar pairs. There's different ways of trading the same theme. I just need to sort of pick which one makes the most sense, trend-wise, strength, and risk reward ratios. So we're at the highs. I would have booked half, if not say 75% of it, and then I would just wait for that pullback. We may miss out without any doubt, but if one is still long, this is not a bad level to book a bit of profit. Okay, this is crude oil price. It's very easy to deal with because it's not going anywhere fast. Obviously, the short-term trend is bearish for 56.03, and it might go down a little bit, but I wouldn't get too carried away. I think this market will compress further, and then eventually we'll have a breakout. Okay, so we covered quite a lot of ground. See if you guys have any questions. So we have Marvin here. Good morning to you, sir. And we have Ronnie as well from Scotland. What makes the S&P much stronger than the FTSE 100? Well, the FTSE 100 in general, that's a very good question actually. And we have Maine West as well. Good morning to you, sir. So that's a very, very good question. So I think it has to do with the fact that the companies in the S&P 500, people have more trust in them than the top companies in the FTSE 100. That I think is an important thing. Let's compare, because I don't know things on top of my head. Since the advent of internet, my memory goes worse. probably seen that yourself. Soon as you literally start to without all access to information, you don't have to remember things. Investing.com, there we go. Okay, so yeah, it's not actually going to show us here exactly. See if this could be something. This is here, but I'm not sure if it actually shows this is just, I'm not sure exactly what this is. Interactive chart. Let's go Wikipedia. Here we go. The companies, but it don't tell us. Maybe it's an equal weight company. That could be something. Yeah, I can't find it right now, but constituents, okay. So I can't actually find really what. Let's do a different instruction. The 5 biggest companies in the FTSE 100 in terms of market capitalization. Okay, let's see this. GMO trading. Royal Dutch Shell. Okay, so crude oil markets not going anywhere, right? HSBC Holdings. So banks, low interest rates, a lot of pain. Look at Deutsche Bank. BP, another crude oil company. Obviously not going to be on top. Pharmaceutical company, rather defensive, right? So I don't know too much about this. Tobacco. Not sure how that industry is doing. I think they're doing actually rather good. I think I did see some report on that. It's the same for the S&P 500, and I'm sure we'll recognize more of those companies than we'll do in the FTSE 100. Microsoft. I'm using a Windows computer right now. Apple. I have a phone here. Amazon. My wife loved that. Facebook. I use that as well. Don't bank with JP Morgan. No interest in Berkshire. Google. Use that every day. And this company, we use this every day. Google. Johnson & Johnson. No. So you can clearly see here, like I actually use products from that company, this company, this company, this company. Not that I'm representative in any way, but you can clearly understand that the sort of corporations that are here versus the ones that are in the FTSE 100 are very, very different. Like energy companies are obviously big, but that's not really what people are focusing on right now. And a lot of people, or the value of these companies depend a lot on what's happening with crude oil prices. And then you have this, which interest rates are very low, so not all, but a lot of the banks are just not doing good. So this is the price share of HSBC, and it's bang in the middle. So I hope that explains a bit. Okay, so we're going to wrap things up. want to thank you so much for watching. Don't forget to follow us on Telegram. Wrap things up. You can as well, of course, like the video. I hope you enjoyed the presentation. So just click here. And for example, if you want to follow us, it's very straightforward. So for example, this is the BBC News, and just to give you an example, you can subscribe to them. If you do, like, not that you should subscribe to them, you do the same here, but I can't subscribe to my own channel. So subscribe, and then you click on that bell button. Click on that bell button, you get an email every time we go live, and I think it also pops up. It gives you like a little section here. So if you do that, you definitely get all the updates. So you can do that. Telegram, of course, we don't put the videos out there, at least not yet. And keep an eye on it. The cool thing with Telegram is I can actually send you voice messages the same way as we can do with WhatsApp. So which, by the way, is another Facebook product that I actually use absolutely every day. So yeah, make sure you subscribe to us on Telegram. Okay, guys, we're gonna wrap things up. I want to thank you so much for being so nice, and I hope to see you guys tomorrow, same time here at msnq.com. Thanks so much, and have a brilliant day. Bye bye.